It has come to my knowledge that though many people know how to mark breakout structures and though many people know how to identify the correct inducement and liquidity, and though many people also know what are trading ranges, the people don't know what are the characteristics of a trading range and what comprises of a trading range, right? What you are expecting to see in a trading range. So in this video, I'm going to be explaining to you a trading range and what you might likely see in a trading range. So before we go on, we first follow the line diagram by marking out our valid breakup structure, right? We may have something like this. So now, right, this is how the market works in the real life. We are going to have many pullbacks in the real life, in the real market, and you are going to get a lot confused. Now, like I said, right, starting from this high downward, the first pullback is what we refer to as our inducement. So if I follow that principle, I'm going to be marking this my inducement here, right? And if I follow that very principle of a valid break of structure that states that the valid break of structure must take out an inducement, which this move just did here, I'm going to be marking my break of structure here, BOS, right? Now, after I've done all of this, I'm going to be left now with a trading range, right? This from this low here to currently where price is, that is my range. So this zone like this is my trading range. If I'm looking for a POI, I'm looking for a POI within this zone, and I know that this is my protected low. I'm not expecting prices to push below this low here, because why? This is my protected low, right? The only time price is allowed to push below here is when we have a change of characters. Now there are also some exceptions in this case where price might weak below this low, so which will not be a change of characters, right? So now we have our trading range. Now from this trading range, you can see that we have a lot of structure, right? We have a lot of pullbacks in this trading range. So basically, this is what we really want to talk about today. And which zone would you be looking for, or will you be interested in looking for entries in this trading range, right? So the first thing we need to note in this trading range is we have the first move, right, which is our inducement. So this is our inducement. So if you start from the high of where price is, which is this high, and we look downward, the first pullback that we see is this pullback here. So this is our inducement. So now when we finally mark this out, this inducement out, now we have a smaller, shorter range in which we can make very little mistake, right? Because the smaller your zone is, the more precise you become. So to this low now, this is what we have, this working range. Now, if after your inducement we have two POIs, right? After your inducement we have a POI. Now we presume that this POI should be somewhere around here, right? An order block like this. So now this order block is what we call a decisional order block. This is referred to as a decisional order block, right? So that is how we refer to this order block here. Now, the reason why it's being referred to as a decisional order block is because this order block has a 50-50 probability of holding. This has a 50-50 probability of holding. So when price comes to this year zone, it's either it holds or it fails. It has a 50-50. Now, if you want to increase your probabilities in this zone, either you use confirmation or you don't trade from decisional POIs at all, right? You don't trade from decisional POIs. When you don't trade from decisional POIs, you are going to miss a lot of trades, but you are going to have more quality trades if you choose to omit this. However, this here has a 50-50 probability, as I earlier mentioned, right? Now, after this POI, we have what we call SMT. This is an SMT here, right? This other block is an SMT. So now looking at this range, right? Let's say we had one, two, three, four, five. five zones which we could have looked to enter here. Now we eliminated one of these, we were left with four. Now we have our decisional POI. Now after our decisional POI, now the only POI which we need to consider now should be the extreme POI. In this case, it should be the extreme POI. This first one is what we call an SMT, right? And we also have this one here. This is our engineered liquidity. So engineered liquidity is the pullback that is very closest to your true POI. That is what we refer to as engineered liquidity. So this zone here, you are not looking to buy from, and this zone you are not looking to buy. After your decisional POI fails, you skip straight into your extreme POI. However, in these cases, there are each of these POI may act as an entry in a case whereby the market happens to sweep, right? If the market sweeps your inducements and gives you a change of characters to the upside, you can buy. If it sweeps these ones and give you a change of characters to the upside, you can still buy. And if that happens here as well, you can look for your buys, right? So this is our extreme POI, and we expect this one. This one has a higher probability of working out if you follow all the steps correctly, right? So now you need to make up your mind if you are going to be trading all of these POIs according to price action, or you are going to omit and only trade these ones. But now when you know that when you are trading these POI, especially this decisional POI, you have a higher probability of losing trades here. So some people, what they normally do is they omit this and they try to focus solely on this POI at this point. So I think that is it for the explanation. Let me go into the chat and see if I can get a good example to show you guys. Okay, so now, right, I told you that when we are marking inducement, right, we start from the high. We start from the high where price is, and we look downward. The first pullback is what we call our inducement. Now, if you look at this zone here, right, starting from this high here, we look downward. You see that the first inducement in this case will be this zone here, right? That is our inducement. And if we happen to mark that out, like I previously stated, if you happen to mark this outright, then we are expecting that, okay, now we don't have a clear break of structure somewhere around here. So now we know that, okay, we have a point of interest here, but this point of interest is above our inducement as we earlier stated. So we can be looking to buy here on the next point of interest below this one, or I told you that there is a case where this inducement here can serve as a, a point of interest when price happens to sweep below this zone. So now, if we happen to play price forward, you see that, okay, here now price happens to sweep this zone, right? Price happens to sweep this zone. This is a scenario whereby you can get a smaller position, right? According to using the change of characters in this model, right? You can get a smaller position here, and you can even extend it using the your Fibonacci level. So I presume that this is how that position is going to look in the real chart. And if you play forward, you see that the market eventually hit our TP. Now, when this market hit our TP, right? Let's say if I go ahead, the first thing I need to do here is start by identifying my inducement. Now, this is my inducement here. This is my inducement here, as I earlier told you. And if I look downward, right? If I look downward here, I'm going to see that, okay, this move already took out the previous inducement. So we have a valid break of structure here. This is a valid break of structure, right? This is the model I just showed you. We call it BOS, a valid break of structure. Now, after this break of structure here, the first thing we need to do is identify our trading range. Our trading range now stands from this low to currently where the market is. And if the market happens to continue make another inducement without taking out the previous one, then we know that our trading range now expands. Now, so here, this is where our inducement is. And the first thing we have is we have our decisional order block, right? We have our decisional zone here, and we have our extreme zone here. So these are the two zones we'll be looking to buy off from, right? So there are two ways which you can do this. You can either go in aggressively here, or you wait for confirmation, right? If this zone, like I said, right, this decisional POI here has a 50-50 probability of working out. So if that zone happens to fail, if this zone happens to fail, then you can still buy off this zone here, right? Now for here we don't have like the how is it called again? We don't have another POI, right? We just have our decisional POI and our extreme. So you can see here, this zone, it doesn't reach, it doesn't meet the requirements of a valid pullback. So that is why we are not considering that zone. So if we happen to play price forward, let's see what price did. Okay, price happens to tap into our decisional POI, and you can see, right? So technically, this is where our TP is, but you can always extend it using the Fibonacci tool. So if you play price forward, you see that eventually price took a longer time to play out here, right? But eventually we are running in huge profit. Now, after this, right? After this, what do you look for again? What do you look for using this again? We already know that, okay, price has already taken out this inducement here. Price took out this inducement here, right? And went ahead to break this structure. This is it here. Everything is clear on the chart. I know that when I'm showing you, you think maybe you really understand. It's just by backtesting that you can understand this concept, and you watching this video multiple times. So now we have this break of structure here. Now we don't yet have the next break of structure because price has not yet closed above this high. But if you look here, you see that price has already taken out an inducement. Price has already taken out this first pullback in this range. So the only thing we are waiting to confirm this valid break of structure here is when price closes above this high. So let's see if we let's play price along and see if price finally, okay, you can see that, okay, price did finally close above this high and also hit our take profit in this trade. So now we have our next break of structure right above here. But since this was just a sweep, what I normally do is after marking this, I mark this BOS, then I will transfer this slightly to here, right? I'll transfer this here. And what I normally do is I'll indicate with an arrow. That is what you do when you see an arrow on somebody's chart. That is the meaning of the arrow, right? Something like this. Something like this. It means that, okay, a break of structure occurred here, but due to it not closing above, the person shifted it to the next zone, right? So after this here, right, after this, we also have a trading range. Now, where is our trading range now? Our trading range starts from this low here. Sorry about that. Our trading range now starts from this low here to currently where price is. Now, when we have this trading range, the first thing we are going to do is identify our inducement. If you start from this high and you look downward, the first pullback here in this range, is in this our trading range, is this pullback right at this point here. Right. So now we after this pullback, now we need to identify our points of interest. Now, the first thing I told you is after the pullback, we have our decisional point of interest. So in this case, this will be our decisional point of interest here. And we have This this is what I was referring to as an SMT, right? This is an SMT, and this is an SMT in this case. So I told you, after a in a trading range, right, only two POIs work. We have your decisional and your extreme. The decisional has 50-50 probability, and your extreme has a higher probability. Now this is an SMT, right? And if you happen to outline this other POI down here, this is our extreme POI, and this is the high probability POI. So now this POI that is just beside my point of interest here is what we call the low of that POI is referred to as engineered liquidity. As the name may suggest, right, engineered liquidity is a type of liquidity that is specifically designed to trigger you to enter into a trade a little bit early so that you get liquidated before price moves in your direction. So now, looking at this, right? Looking at this, we have our POI here, we have our decisional POI. All we need to do now is wait for price to approach our POI. Now, as I earlier told you, we had an inducement here, right? As if price happens to create a new inducement, we are going to update that. So as we play along, okay, as we play along, you can rightfully see that price broke above this high, just significant, it just wicked above this high. So we now update our inducement. Now this POI no longer becomes our decisional POI. Now this is a zone that becomes our decisional POI, right? Because it's the one directly below our inducement, and now our trading range now starts from this zone here. So if you continue to play along, we see that our decisional POI got violated here and price continues to move to the downside. So like I said, I told you, after this, we are targeting this extreme POI at this level, right? After your decisional POI fails, nothing, you just need to focus on your extreme POI. So if I happen to play price along, what I normally just want to do is wait for the market to tap into this my decisional POI, right? So you can see from here, price did a little sweep below this low, but I don't think this will sustain. So okay, so now we have price has finally mitigated our extreme POI. And if you look cleanly here, you are going to see that we already have a change of characters at this level. So on a smaller time frame, on your entry time frame, you are definitely going to see all those things, right? So now what we are normally doing is we are entering our trade and we are targeting the high, right? That is where we expect the next break of structure to be. And we put our stop loss just below our point of interest, right? Our extreme POI. So this is how this position is supposed to be. Now, one thing that makes this is this we have this one thing that makes this POI valid is this imbalance down here, right? This is what makes this POI valid. So now all we need to do is play price along and see if what I taught you actually works in the real market. So now looking at this, right? Looking at this, at the end, we have a lot of consolidation, and those that did not enter the initial position can look to enter at this imbalance right over here like this. So we can see at the end of the day, price hit our point of price hit our zone, right? But when price hit this our zone, price did not really close above this zone. So we still had another chance for another entry at this level because price did not really mitigate this extreme zone here. So if you look from this high, right, we identify here, right? We identify that this is our inducement. So if you starting from this high, if you look downward, you see that this is an internal pullback here. So this is our level of inducement here, and we have just one POI here, which we can be looking to enter a trade. So definitely it should be this zone. It should be this zone here. So if the market happens to come back to that zone, that is where we are looking to buy. And that is the concept of choosing your right POIs, right? So all we need to do is wait for price to eventually get back to that zone, which the price did over here, and then you can look for your next position right here, right? Your next position right here, you put your stop loss above the zone, below the zone, and you target where your next break of structure is supposed to be, right? So that is how we trade, and these trades are not just random. You check the Telegram group, you are going to see these setups. I've sent them there before, and I'll keep sending them, right? So you can see that price eventually hit this TP, right? I send this setup in the Telegram group. I send this one. In fact, let's go over to the Telegram group and let me show you what we have been doing. Okay, so as you can see here, this was the setup, right? AUD, USD. This setup was sent on let's check the date. Sorry about that. Let me check the date for you. May 5, right? This was the May the 5th. So that setup was sent on May the 5th, and we were following up the setup as much as we could. These are other setups which were sent on that very May the 5th. Sorry, this was just my withdrawal screenshot. So these were other setups which were sent on that May the 5th, and these were setups that were playing out. So finally, this was the setup, right? This was the setup when it started playing out. So this was the first entry. We put our stop loss here. This was our zone right here, right? Our inducement got taken out, our point of interest, and we bought. So as simple as that. Those screenshots that you see, those charts you see me post, they are not just random charts. They are not just random charts. This these are other setups which we sent as well. There were a lot of them. We always send a lot of setups here, right? So you make sure that you are in a Telegram group. If you are watching this on YouTube, then check the link of the description of this video to see that. So we have setups here, and yeah, that's it, right? So if you are watching this on YouTube, please make sure that you subscribe to my channel for more content like this. And yeah, thank you for watching. So this was when the trade finally hit TP. That was when the trade finally hit our TP1, and we are looking to go in again for the next trade. So that will be all for this video. Thanks for watching. God bless you all. Have a nice trading week.